The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. Got about 24 minutes to go until the start of trading, and we got a market this morning already. How about 40 points down, 40 points back up? That's what we've done in the last 2 hours of trading. There's the action from 7 a.m. this morning. You're trading right now positive by 3 points, but boy, we were just down at 58.28. Right now, we're trading up by 2 at 58.63. NASDAQ 100, you see the action yesterday. On that 1 p.m. Eastern Time 20-year auction, you drive down to a low of 21,072. You dip just below that price level this morning, and we catch a lift from 8:30. We're trading at 21,210. Dow right now negative by 68 points in the red, and you get the Russell leading the way in the red, off by 0.5%. We jump to the all-important notes and bonds. And yeah, we bounced from where we were prior this morning. You're getting a little bit of a bounce in terms of higher price, lower yield right now. But boy, all things considered, when you take a look at the bigger picture, you're talking about 4.59 on the 10-year. And yeah, a slight reprieve, but look where we are, right? Right at the April lows is where we are in that 10-year. And you get the 30-year right now. No reprieve for the 30-year, right? See that difference? Yeah, we've bounced a bit, but in terms of the red, okay, you put that on a 5-minute, yeah, we bounced a bit, but guess what? We got the 30-year right now, 5.11. 5.11. We were making headlines crossing 5%. We're 5.11 on the 30-year right now, and the 10-year sitting at about 4.6%. You jump over to the dollar, DXY. A bounce off the lows of yesterday, but still well under 100. We're trading at 99.719. Keep your eye on that dollar. Dollar weakness under 100, even with rising yields, right? We're talking to Teddy yesterday, talking about divergence. Can't last forever, but even with high yields, a lot of dollar weakness in this market right now. You jump over to gold. Pulling back from the highs of 33.46, and yeah, you talk about some volatility. Down about $65 from the highs from about midnight to where we were at 7 in the morning. Right now, gold down by $2 at 33.10. You jump over to crude. They're talking about more production hikes for OPEC. Yeah, and there's that acceleration from $62 almost to $60.25. So much for the spike on Tuesday night. Right, with the possibility that Israel was going to strike Iranian nuclear facilities. No bid on crude right now, man. You check out crude, looks like it's rolling over on its way back to $56. We'll talk a little bit more about crude coming up as well. And how about Bitcoin? Nothing's stopping Bitcoin right now, that's for sure, right? You check out that chart, my goodness. We're talking about all-time highs. We reach 112,000. You're just off that price level. We made that action at about midnight. And yeah, we just touched 112,000, almost, within about $20. Yet again, Bitcoin up by $2,700 on the session. You talk about a run, man. Remarkable. All right, we jump to the news of the morning. We get jobless claims at 8:30. Initial claims decreasing, 227,000 in the weekend in May 17th, basically in line with expectations. Continuing claims rising to 1.9 million from the previous week, but all things considered, pretty healthy numbers. Yeah, the level of jobless claims indicates companies are relatively comfortable with staffing levels despite elevated anxiety. The data, not that bad so far, to put it lightly, right? All right. And we talk a little bit of crude. And there's the headline. OPEC Plus discusses another supersized output hike for July is the number there. And that would be the potential third consecutive, okay, with an output hike of 411,000 barrels a day among the options under consideration. And yeah. Punishing overproducing members to recouping market share and placating Trump. You got a lot going on, right? They say it's to satisfy demand, yet I think there's more going on there, right? Another 411,000 barrels is what they're talking about for crude. We'll see where we go from there. But guess what? Lower prices coming at you. All right, OpenAI. Microsoft has been on a tear. And this one's an interesting one. You know, I started going down the rabbit hole yesterday myself saying, man, this is really it, right? They're really coming for the iPhone. Okay, you jump back to Apple shares right now. Apple diving lower with the market yesterday. Okay, not to do with the news of them hiring the Apple designer, John Ivey. Johnny Ive, right? But boy, you look at it, right? And you think about it. There's a real opportunity for disruption. Okay, and this goes beyond the technicals, of course, okay? But this reminded me of many deals, but they're going after the talent here, okay? They buy it for $6.5 billion, an all-stock deal. They already owned a certain percentage of that company, so really they're spending about $5 billion to bring him, and yeah, many of his team from Apple, okay? And I started saying to myself, right, I said, okay, and think about this. Go even next picture. You think about phones, right? Why do we need phones, folks? Why do you need cell phone service? Internet's going to be everywhere. AI controls the internet. Because I said to myself, man, iPhones, right? But iPhones are locked into phones. You're locked into a payment plan. Everything could change in 10 years, man, which is mind-blowing when you put it in that context. But yeah, there's no reason why OpenAI, Microsoft, they can't make some type of vehicle in that degree. And yeah, it's a bet they can do this all before Apple gets its own AI house in order, right? Develop an era-defining product that changes the game, just as iPhone did when it was launched in 2007. He only left Apple in 2019. He doesn't think the device would replace the smartphone, at least if you better believe he wants to replace the smartphone, okay? And there's no reason why he can't. Because you go even, you know, we need cell phone service, right? But then you're going to have satellites. Anybody's going to be able to gain access to cell phone service with any type of device. You can already do it. The ecosystem on Apple, yeah, it's going to be tough to eat away at. But boy, when you're talking about being in the market, Apple sells their phones to $1,200 to $1,500, and they get people to buy them every year or two, right? That's a business everybody's going to try and eat into. And for the first time, you're seeing some real competitors coming about, paying $6.5 billion to bring Apple's design team in-house for OpenAI. Think about that, right? That's the headline, okay? Microsoft partner, OpenAI, pays billions of dollars to bring Apple's best designers in-house to develop a product to compete with the iPhone. Imagine that was the headline yesterday, because that's really what it was. Microsoft shares are in the positive this morning, trading up about $2 to $4.54. There's a bid for you, right? S&P is positive by 1, clawing back the losses we had this morning, accelerating from about 8:30 on that jobless claims number. Decent numbers. Russell trading lower, yields higher yet again. Stay tuned, folks. We're coming back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the fund involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We get the S&Ps right now. Negative by about 4 points. NASDAQ 100, positive by 22. You see the volatility yesterday, and pretty interesting, right? Where do we come down to? In terms of Sunday night, we have the Moody's downgrade. Okay, looking at the NASDAQ 100, almost right where we accelerated to yesterday in terms of that low, around 21,100. That's right where we were early Monday morning. We've bounced a bit, but yeah, we got some pressure to the downside right now. And you talk about yields, the 30-year. Now, a couple interesting ones from the journal. This one is just straight out talking about longer duration. Okay, the headline out there, long-dated bonds sell off on the tax bill. Yeah, and Bitcoin rallies, to put it lightly. But boy, you talk about a move, man. Okay, this move on a 30-year basis, you talk about getting decimated on a capital basis, right? Let's check out TLT. Okay. I mean, people think that they're protected in fixed income sometimes. How about losing 10% of your money in 6 weeks? 10% of your money in 6 weeks, putting them into the TLT, long duration, right? 20-year plus. TMF, the direction, long duration, 20-year plus. Double, I believe. I was talking to our man Sean Edwards yesterday. Let's get the exact definition of what that TMF is. Yeah, 20-year plus Treasury Bull and Bear 3 times ETF. Okay, TMF and TMV. But boy, talk about some accelerations, man. Making 30% off the lows. Yeah, there it is. Bull and Bear 3 times. TMF, TMV. You want some exposure to fixed income, folks? There you go. Okay, but yes, we got quite a move. And, you know, if you think about it, right, this is the tough part about this conversation, okay? We'll pull up the yield curve again real quickly. Why would you go out that far right now? I think there's a lot of risk going out that far. Now, there's less risk going out when you're buying it where we are right now. I'll say that. Okay, as in, let's just pull up the 30-year, for instance. You got a lot less risk buying the 30-year at 110 versus buying the 30-year at 120. Okay, but here's what I find myself, because you better be thinking about yields right now. Okay, because we may be on the verge of a real trend in terms of yields, the dollar, etc. Because what's happened is, if nobody wants our yields, they don't need our dollars, right? No matter how high the yields go, if nobody wants our yields at this price, and eventually they'll want them, okay? And hopefully we're approaching that level. But you're not getting the dollar action either, okay? The divergence going on. But if you told me I had to go out to a 10-year at 4.6 and I was only getting rewarded with barely half a percentage point yield to go out 20 additional years, I would never touch that, ever, right? With what's going on with the debt, what is, I mean, imagine that, okay? And this is where, people used to say it when negative interest rates came in, okay? They'd say, no, this is not how it works, right? They'd say, that's not how things are supposed to function. Well, it functioned that way for 20 years, okay? You can go much longer than you'd ever imagine. So, would you ever take that? Now, that year, okay, going from 10 to 30, you're taking the risk from the year 2035 to the year 2055 in duration. And the reason why you're taking that risk is for an extra 0.5%. I would never touch that if you told me I had to hold that. Never in my life. And that's what investors are saying right now, too. Because think about it. All this conversation over the debt and the deficit and the tax cuts going on right now, that only takes us to year 10. Nobody's talking about what happens in years 20 to 30 or 10 to 20. Okay? Imagine where the deficit's going to be in years 11, 12, 13, all the way up to year 30. Okay? Investors are demanding, you see it right here. Okay? Everything is down, but guess what's up? The 20-year and the 30-year. Okay? And it doesn't mean it's going to fall apart overnight, but you are going to see some pressures here where, and just listen to yourself. Like you're saying, EKS, right? Why would you be touching long duration right now? You think the risk is worth it? You think the risk is worth the reward? Well, for the risk to be worth the reward, you have to anticipate that rates are going to drop. Because there's a real risk they're going to rise. And so, factor that in when you look at these rates. It's a worrisome trend, okay? And it's especially worrisome with the amount of debt that we have going on. Because those interest rates spike and we deal with higher yields, we're dealing with a problem that we didn't have when yields were up at this level. And that's a great point as well. Because, I was talking about yesterday in the program, and this is why we got to get the house in order when it comes to debt, okay? And yeah, we were well below these levels. You go back on the 30-year, the chart goes back to 1996 on my chart, okay? But you can see that at many times prior to 2007, you go back 20 plus years, we had lower price and higher yield. Okay, the 30-year had a higher yield. We were in a higher yield situation coming into the dot-com bubble and really coming into the financial crisis. Financial crisis hit. We dropped rates to zero. We stayed there forever. Okay? But if you go back to this era, 99, 2000, prior to that, the cost of debt service was nothing like what it is now. And that's why higher yields are more of a problem. And that's a debt cycle, right? It's a vicious debt cycle. And we're seeing the beginning of it right now. And hopefully that helps spur some fiscal responsibility. Because you look at those 30-year, who's stepping in to buy 30 years? When why not buy 10 years? Okay? I mean, I often talked about, right? If you're an investor seeking out CDs, let's put it this way, okay? What I think one of the best ways, and it's basically just scaling in to a CD, is to do a ladder, folks, okay? And, depends how far out you want to go. You want to go out a couple years? That's one of the least risky bets because then you always are short duration, right? You're always resetting your ladder to take advantage of the current interest rate. What happens is, well, if inflation soars, and you have higher yields, you're going to be rewarded from that by when you're rolling over your ladder. On the flip side of that, If it decreases, yes, you're going to get a lower yield, but guess what else is going to happen? You're going to have less inflation as well. Now, right now, what I even like going out a little bit further, especially because where we have yields almost right now, is going out to like a 5-year ladder. 5-year ladder, okay, is yielding you about 4.22%. It's almost, right now, CDs are at about 4.25%. And the remarkable thing is they're at 4.25% on the 1 year. They're at 4.15 on the 24-month, the 2 year. So they dip a bit to the 2 year, but then they come back up. And you're getting about 4.25%. And every year you get to roll over and take advantage of the next interest rate. It's a way to diversify yourself without going too far out. But you know what I wouldn't touch right now? A 30-year CD at 5. Because we might have some rising yields in this market. Stay tuned, folks. We're coming back.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. S&Ps kick off the trading session down about 4 points. We had a volatile overnight session, back to a 15-minute chart. And yeah, we accelerate lower, and we dip below that price level, and basically we pick things up right where we were at the lows of yesterday's session. Right now off by 6. NASDAQ 100 barely in the green, up by 11. Dow off by 95 points right now. Russell off by 10. We jump around to some movers this week. UNH down about 3%. Talk about a bounce from 250 to 326. And right now we're trading another $30 off that price level as they deal with their woes. Strong day from Google yesterday on that new AI offering, right? We talked about it. $250 a month. What's it come with? 30 terabytes of data, YouTube Premium on top of it, but really it's all about AI. And yeah, we talked about, you get a little video generation there. Boy, video generation, I've played with some of them, folks. And it all deals with credits. There is a vast demand for some of the products that these companies are going to be able to put out. $250 sounds like a lot, okay? I mean, imagine this, and this is where yesterday goes. I mean, we have TFNN going on, right? We have payroll at TFNN. We have Tiger Construction. I have payroll at Tiger Construction. Okay, we have Tiger Real Estate, of course. Bestford does a great job, Tiger Real Estate. I'm actually going to talk to Bestford tomorrow afternoon, folks. So my dad used to have Bestford on. If you used to love those conversations about real estate, I'm going to be hosting the afternoon show tomorrow. Jacob's out this week, and that'll be with Bestford tomorrow afternoon, Friday. He used to close out the session, so we're going to try and bring those back. Friday, I'm going to talk to Bestford. And we're going to talk some real estate, but talking about payroll, right? Point being, somebody's making $60,000 a year. Maybe you put benefits on top of that, payroll taxes on top of that. Let's just say they're making $52,000 a year all in. Really, they should be making more money depending on what you're talking about, but $52,000 a year right now, it's $1,000 a week, folks. That's $4,000 a month. You realistically could pay $4,000 a month for many AI services, and all you need to do is increase the productivity to eliminate one employee across the company, and it pays for itself. Many small businesses, and I'm not even just talking about Microsoft, and it's not happening, okay, as in, people aren't getting laid off this instant, but that's the way people are going to be able to rationalize some of these costs. Because, yes, as we said, right, if you're hiring anybody, the cost of human capital is extremely expensive, as we know. And $250 a month is nothing if you're comparing it in that context, and that's where it's going to start to go. And it's basically already there. So you see the acceleration yesterday, and yeah, it's not over yet. Google's up by 1.4% right now. We'll see if they can make that transition from losing a monopoly on Google to monetizing what they've been spending for Google Labs, right? Gemini, etc. And they always have YouTube. There's only one YouTube, folks, and that's never going away. Shares down about 0.7% as their chief designer Johnny Ives is coming for the iPhone, man, and he's doing it with Microsoft backing and the biggest AI company in the world. The battle's on, man. Nvidia shares in the positive, up by about 0.4% this morning. We jump over to some retail. Walmart up by 0.2%. Target up by 0.8% after their tough day yesterday on earnings. TJX, they pull back as well from the top end of their trading range. We're at 131, basically flat on the session. Kohl's bouncing a bit, up 1.1%. Let's jump over to Nike. So, Nike, you dipped lower yesterday with the market. You're up by 0.6%. We jump over to Amazon shares, negative by about 0.4%. And I'm looking for the article where Nikes. You're going to start seeing Nikes on Amazon again. You sure are. That's not it either. Maybe I don't have it pulled up. I was reading it this morning. Come on. No, I don't have it pulled up. But yes, Nike, they're going to start selling on Amazon yet again. They're bringing it back. Yeah, volatility on Nike trading lower. All right, market's ripping lower. Here we go. Yet again. This is why you got to love technicals, folks, right? If you're buying this market pre-market, you're a trader, of course you're going to run into some resistance as you get into this area above 58.60. Okay? Not that it's too easy sometimes, but it's definitely not too complicated sometimes. We're ripping lower by 15 points right now in the S&Ps. NASDAQ off about 34, Dow off 95. UNH down about 3%. We were down more in the pre-market. And taking a look at those CD rates, just to pull them up real quick. Okay, this is what CD rates look like right now, as of today. All right? And these are brokered CDs. Okay, these are brokered CDs that are available in most brokerages. Okay? And you might be able to find better or worse going to individual banks. But these are brokered CDs and where they line up. And the interest rates you're seeing here are non-callable CDs. Okay, so the banks cannot call them back on these yields. basically 4.25 across the board, right? But to put it back into the same context, would you ever, if I ever said to you, hey, this is the yield we're giving you from 1 to 5 years, you want to lock in 30 years, I'll give you an extra 75 basis points for those additional 25 years. Remember this conversation, man, because this is the market, okay? The market is all of our mentalities in one. That's basically what it is, right? It's all of our emotions, fear, greed, on display. It's why people love the market. If you can figure out human psychology, right? Where's the next move? Well, just figure that one out, man, because what's going on right now, as the House passes the tax bill, okay, we got a few last-minute changes, and, you know, you can always say that you can grow your way into pay for anything, but that's not the way it works, folks. It never works out that way, and it's not going to, and this is not going to create some rapid growth that did not exist. It's not going to happen. Okay, you can always hope for it. You can say it could happen. You could say, it's like when somebody walks in with a pro forma spreadsheet and they say, this is what we're going to do. You know, and they say, well, yeah, how does that make sense? Though that's never happened before. We're just going to grow those numbers like that? Yeah. And then you say, well, what if it was true? Think how much money it would make if it happened. And that's what people say in the tax cuts. They say, well, what if we grow the economy at 3 to 4% over the next decade? We'll pay for everything. All those tax cuts, we'll pay for them. Nothing wrong with hope. Hope is not a plan, as they say, okay? And the market's reacting to it, okay? Market's not hopeful that somehow this is going to lead to fiscal responsibility and a big, beautiful growth plan. That's not what the market's reacting to, all right? And the way that they score this plan, talking about $3 trillion here and there, right? There's many provisions that are only set to last 4 years that are realistically going to be extended, no matter who is in power, okay? Democrats, Republicans, no matter what happens. And why would you ever take the extra yield? You got great yields out there right now. And the beautiful part about taking, you know, if you really want to get out of the market, right, you get into fixed income. You don't want to touch any corporate. You just want your CDs, right? You want treasury CDs. I get it, for sure. You're in retirement. You're never working again. It's not worth the risk, period. There's nothing wrong with having a bucket of your savings in this type of deal, folks. You're going after CDs. The beauty of it is because what if rates rise? Excuse me, on a CD, you get to take advantage of that rising rate every single year. You're loading back in. If you're doing a 5-year, for instance, right? If you're doing a 5-year, every single year. Yeah. You get to reaccess it. And we'll talk about it again. We'll finish this up because not enough people, I think, you know, are aware of that type of action. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. S&P is negative by 3 right now. We got the NASDAQ 100 barely in the green by 25. All the other indices in the red. Not Bitcoin, though. Pushing the highs of 112,000. My goodness, right? And yeah, so much for Ethereum. You check out Bitcoin. And for a while back, I was thinking, you know what? And I never really stepped into it, thankfully. But yeah, you look at that from 4,100 down to 1,300. Nowhere near the highs on Ethereum. Bitcoin getting all the attention across the board. Pretty remarkable. Yeah. And yeah, jumping back to those, and you're welcome, Mike. You look at those yields, folks, okay? You go over the level that you're getting. I would never go longer duration than that, And you got quite a deal in there when you're going shorter, because the best part is right now yields are rising, okay? If yields continue to rise, what happens is your 1-year CD on a 5-year CD is going to expire in a year, and then you roll it back over to another 5 years, and you're getting access to that. And right now you're at almost 4.25% risk-free. Folks, 4.25% risk-free, okay? When you start compounding some of those numbers, I would never touch 5% for 30 years when you can get 4.25, and you're not even getting 4.25 for a 5-year, okay? You're getting 4.25 for a 1-year, 2-year, 3-year, 4-year, and a 5-year that you get to continually roll, so that you're getting exposure every year to the current interest rate environment to average that into your yield that you're getting. And what happens on the 30-year, which is going to be out there, okay? I was listening to Bloomberg. There was a great analyst talking about, what does happen here is that when you get up to these certain yields, you have pension plans across the country, right? You have whatever it is that are searching for that actuarial return that they need for future liabilities that they have, okay? And in order to be able to support those future liabilities, whatever they are, for pensions, etc., they need to achieve a certain return. And when you can lock that return in risk-free, they lock it in. Period. And so you're approaching these levels of 5% where realistically you could have that form of demand. But guess what? Eventually that demand will eat through as well, right? You'll eat through that demand. And that's the worry, that you really have start people stepping away from a longer term duration. And that's where you're finding bids, okay? Because you're not finding bids for people who are making the risk determination right now from a 5-year at 4.25 to a 30-year at 5%, okay? You're getting demand right now from obligations in the future that are met by accessing that yields, and they don't need to go higher. The real worry there is, okay, is that the market steps in and says, hey, guess what? You're going to need a lot higher yields than that, because we're going to be dealing with higher yields, higher deficits going forward, and the market's going to demand higher yields because we're going to have inflationary factors and dollar weakness to offset those as they come. Yeah, Google's catching a bid right now. this is continuing. We got Google pushing the highs of yesterday. And you break above here, watch out, man. You know, the animal spirits are alive and well in this one. When are these companies going to really start monetizing, right? Well, this could be a big one. $250 a month. How many people are they going to get? Like I talked about, the demand might be bigger than you think sometimes selling those big products, you know? They're in the business of selling. Yeah. And Microsoft as well. Yeah, I'm not the only one talking about the fact that headline yesterday is Microsoft partner OpenAI hires Apple chief developer and his entire team to create product to compete with the iPhone. And there it is, right? You got a little selling on Apple to kick things off. Microsoft catches a bid. Google as well on their news. NVIDIA shares back in the green, barely by 0.2% right now. AMD slightly in the red. Check out some of the streamers. Netflix down about 0.3% right now. Warner Brothers Discovery down about 0.8%. I tell you folks, if you've never seen the program Chernobyl, okay? And I say the program, it's a mini-series on now called HBO Max, not Max, don't get confused. Check it out. It's a 5-part mini-series, and it's based on the true story of Chernobyl. Some amazing actors in that mini-series. I saw it a few years back when it came out, and I watched some of it again last night, and it's amazing. It is. Check it out. And, you know, anytime world history events, of course, going on. But you're in, you know, Soviet Russia at the time. You're dealing with nuclear war, basically, and everything that goes with that. Just a remarkable miniseries. 5, and it's kind of like a nice. That's a nice sweet spot. 5-part miniseries. I like it. You can watch it anytime. Nonetheless, HBO's got some great programming, man. I don't know who canned that idea of HBO, but you know what I will say is, when I log on to Max, okay, let me see if I can find this. TNT, TBS. They're a big. Let's see. Does Max own both of them? TBS. I think they own I know they own TNT. Do they own TBS too? Maybe somebody can help me. Let's see. Yeah, they do. They do. They own TBS, TNT, CNN, Cartoon Network, Adult Swim. The reason why I say TBS and TNT is that when you look at the top shows, okay. Let me get into this. It's remarkable that you're talking about. It's a lot of the TNT TBS shows. And here's a glimpse, okay? And the point of all this is going to be, yeah, they better go back to HBO if they're really going to. You got 1,000 Pound Sisters, TBS or TNT, Poly Family, okay? 90 Day Fiancé somewhere. There's 90 Day Fiancé, okay? And that's a team. Now, what they do have is they have sports. They have the Knicks and the Pacers live on there last night as well. And I probably should have watched that game. The Villanova Knicks. We now control the Vatican and the Knicks. Villanova. They control the Vatican and they control the New York Knicks. Not sure if you guys were aware. I kid. But yeah, heck of a game last night for the Pacers, man. Those poor Knicks. But nonetheless, it's all about HBO. Okay? As in, what do I really find myself paying for on that service? What I pay for on that service are the award-winning shows. Maybe some of the movies, but really it's the award-winning shows. You know, and HBO's got such a brand that it goes all the way back, whether it's Sopranos, whatever you're talking about, right? But they got a good show up there from Conan O'Brien. He visited Ireland. That's a Max original. Some of the shows, okay? But it's HBO is where that gets us. The Last of Us is a big one on there. I actually watched that show as well. But yeah, they're getting back to their roots, but they got a long way to go. Nonetheless, long-winded way. Warner Brothers down about 0.9% right now. Paramount shares down 0.2%. Comcast down about 0.7% right now. But yeah, check out Chernobyl if you haven't seen it, especially if you like any type of that. Great miniseries going over that Chernobyl disaster. My goodness. All right, folks, stay tuned. S&P's off by 8. You got the NASDAQ 100 up by 24. You got Google. Look at that, man. It's not stopping. Yeah, Google up by 3.3%. The market pricing in a product for the masses at $250 a month. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. You got Google shares accelerating now, up by 4% as it's Google lifting the market almost. S&P's positive, Dow positive, NASDAQ 100 up by 81 right now. And yeah, coming right back up to the highs we made at about 7 a.m. this morning. Critical area, that's also kind of the shop we got right on that first acceleration to lower prices on yesterday afternoon. So check out this one. Kraken. They're going to be trading everything, folks. How about being in exchange this morning and you wake up? Now, this is just out this morning, 9:45. Okay, Apple, Tesla, NVIDIA shares, they're going to trade as digital tokens on Kraken. Yeah, as Bitcoin plows to all-time highs. So Kraken, a cryptocurrency exchange plans to allow non-U.S. customers though, right? Tokenized equities. This is where it's going, okay? I understood this one, and I don't understand crypto, the fundamentals, as well as most, okay? But I understood this one instantly, man. If you can trade a Bitcoin, you can easily trade a tokenized equity. There's no reason that we need exchanges in shares when it's going to be able to happen. The rollout's going to start in the coming weeks with tokenized stocks going live in Europe, Latin America, Africa, Asia. Pretty remarkable. It's based in the U.S., and yeah, I imagine this has to do with regulations, right? What's the point of putting them on blockchain? Well, the point is, slow settlement times, right? High fees. Why is everything closed on the weekend? Why don't we have 24 hours of trading? The questions write themselves, man. It's happening. It's happening right now. Remarkable. But yeah. Hey, we'll see what happens, but that's where it's going. There's no reason why we can't trade AI. If I want to buy Apple shares at 11:59 p.m. on Saturday night, you're going to be able to. That's what's happening, man. It's coming right now. All right, folks, thanks so much for kicking off your trading day right here with me at TFNN. We got to replay this hour. Our man Basil Chapman's out. I believe we do. Yeah, we got to replay this hour, I believe. But, folks, stay tuned. We got our man Larry Pesavento coming up as well. Have a great day, folks. We'll see you tomorrow.